I'm sure you've seen or heard people saying the US housing market is cooling down.
On track for the worst year since 95. This is WSJ. Look at that chart, Vinny. Look at that chart right there. Craziness. U.S. home sales are on track on the worst year since 95 due to high home prices and elevated mortgage rates. September sale fell another 1% from August to an annual rate of 3.84 million, the lowest since October of 2010.
With interest rates still high, fewer buyers, and homes sitting in the market longer. But in the Bay Area, things look a little different.
Are prices still hovering around record highs?
Yeah, and they haven't moved in a while, Jessica. Over the last year, housing sales across the country fell. Here in the Bay Area, though, they're up.
Interest rates have come down slightly, but they're still high, and yet prices here are holding strong, with some even increasing. So what's fueling this resilience, and more importantly, can it last? Today, we're breaking down why the Bay Area real estate market isn't following the national trend and what this could mean if you are buying or selling. Let's get into it. While much of the U.S. housing market has cooled off due to higher interest rates and economic uncertainty,
is this announcement to boost housing supply by throwing money at the problem? Isn't that what got us here in the first place?
Fresh data coming in today that may spark some housing market hope, but it's new home sales. New home sales jumped 4.1% month over month in September to the highest level in nearly 1.5 years.
Housing starts lower month over month, but beating expectations this morning. That said, the rate on a 30-year fixed remains right around 6.7%.
The Bay Area remains a bit of an outlier. Nationally, loan demand is down as people hold off on buying homes, and banks like JP Morgan and Wells Fargo have noted this trend in their earnings. However, here in the Bay Area, prices continue to rise, driven by unique local factors. The primary factor that is at play is supply and demand. The Bay Area has consistently had a shortage of housing, and this has only been made worse by the reluctance of current homeowners wanting to sell. Many who secured low mortgage rates during the pandemic are holding on to their properties, unwilling to swap their affordable loans for today's higher rate. This has kept inventory tight, pushing prices up despite a slower pace in sales. Another factor, and one that's been the biggest contributor to all this, is the tech industry's impact. The Bay Area is still home to some of the world's biggest tech companies, and even after the wave of tech layoffs in 2022, the sector remains strong. Stock market recoveries in 2023 have helped fuel the purchasing power of many buyers in the Bay Area, allowing them to continue competing for homes despite higher mortgage rates. Now, I'm not here to tell you that the Bay Area real estate market is bulletproof. Back during the mortgage meltdown, the Bay Area was not insulated from the housing crisis. In fact, the region was hit hard, with home prices falling by over 20% in some areas. It took several years for the market to recover, largely due to the eventual rebound of the tech industry and the strong local economy. This history reminds us that while the Bay Area may be resilient, it's not immune to broader economic downturn. However, today's market is different. Back in 2008, there was a glut of inventory and lax lending standards. This is not the case right now, but definitely there are lessons to be learned. Just as the Bay Area bounced back stronger after the 2008 crash, it's continuing to show resilience even in the face of national economic pressures. So what does this mean for home buyers and home sellers? If you're a buyer, you can look at this whole situation as a positive sign, and dare I say, act quickly. There are fewer buyers out there. With fewer buyers actively searching, you might find yourself in a less competitive environment. Instead of competing with 10 to 15 offers, you might just be competing with 2 or 3 other buyers. While prices are still high, the potential to negotiate with sellers has increased. I had 2 listings recently that were located in highly sought after neighborhoods here in the East Bay. One listing got just 1 offer. Buyers were coming in good numbers, but we ended up with just 1 offer. We didn't sell for the list price, but I believe the sellers still did okay. The same thing with the buyers. While they might not have gotten the price break that they wanted, they still got a better deal. My point is that it wasn't like the price was crashing. My other listing has a little bit of a different story. It was arguably one of the best house, if not the best house in the neighborhood that has ever come up for sale. Buyers were coming in droves. We got multiple offers, all right. 4 offers. However, all the offers came in a little under asking price. So instead of being in the driver's seat, we were tiptoeing around the offers and making sure that whoever my seller accepted was a solid buyer. So that's number 1 for you buyers. Competition is not that bad right now, especially heading into the election and the holiday season. You need to start that home search now. The second positive sign for buyers, interest rates. If interest rates drop further in 2025 as projected, you might have an opportunity to refinance and consequently lower your monthly mortgage later on. Now, one word of caution for you buyers that will be doing this. Please do not put yourself in a situation where you are banking on interest rates going down, because there's always the possibility that it might head back up again. So make sure that you are comfortable with the interest rate that you will get, and if rates do come down, that's just icing on the cake. I had a client that was banking on interest rates changing or going down. When they bought their house, everyone was saying that the feds were eventually going to stop raising rates and ultimately lower them. That was 2 years ago. Until now, the rate that they got at that time was still lower than what we have now. The problem was they were banking on rates going down and lowering their monthly mortgage payment. Sadly, they got into all sorts of financial bind because of that. Now, for sellers, the market remains strong, but it's slowing down. Homes are staying in the market longer than they did a year ago, and fewer buyers are jumping in right now. By the way, those 2 listings that I mentioned, both of them took an extra week to go pending compared to the average days on the market. This means not only pricing your home strategically, but also making sure the house is prepared and ready for sale. I have videos on my other channel about helping sellers get top dollar for their homes. Check it out over here. As I have mentioned, we are moving into a slower season for sales. But with the right approach, you can still secure a strong deal. If you're navigating this unique market, whether as a buyer or a seller, it's critical to stay informed. Not only do you need to subscribe and hit the notification bell for regular updates on the Bay Area real estate market, also, if you need a local realtor, my info is in the comment section below. I'll be sharing more insights on how to position yourself for success in this shifting landscape. Look, there's no other way to say it. The Bay Area real estate market continues to defy national trends driven by high demand, low inventory, and the influence of the tech sector. But history has shown us that no market is invincible. Will the Bay Area continue to stay strong as we head into 2025, or are we due for a correction? Only time will tell. For now, though, it remains a competitive market with its own set of challenges and opportunities. Thanks again for watching. If you found this video helpful, give it a like and leave your thoughts and comments below. What do you think will happen in the Bay Area real estate market next year? See you on the next video.